What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we saw a cool off with selling across the board in all of the indices. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we saw SPY dropping 0.66% and closing below the 5 EMA. Remember, just yesterday we closed over our price target at 418, but we did not get a follow through with that price target today and we did close back below it. Normally when we get a breakout, we would like to see a second or third day follow through and we did not see that today. Also note that for the week, we basically went absolutely nowhere in SPY. From the open to the close is only a few cents different, which means we just went sideways from open to close from Monday to Friday. You can see that a lot better on a weekly chart as we opened the week somewhere around here and we closed the week right around here. So even though we did have some volatility in between, it was a relatively flat week and it was a very strong consolidation. You can see SPY is building up sideways price action, which is a type of correction. Normally a correction can go through price or it could go through time. Right now we had plenty of opportunities this week. If we wanted to see big sellers stepping in, they could have easily dumped their position from Monday through Friday and they chose not to. Right now we're seeing a distribution and we see SPY going sideways and cooling off through time. Now this was the end of the month and there is going to be a very important macro level analysis we need to look at come Sunday's video. But right now just understand that this is a type of correction and we're not seeing the correction happening through price, we're seeing it happening through time. So eventually this will build up enough energy for a monster move. And we don't want to make any assumptions if the move is going to be to the upside or the downside. We want to let the price action do all the talking. So back to this daily chart, the most critical support level to maintain the bullish trend is going to be holding up above this 20 simple moving average, which is now going to be right around $414. It continues to climb higher because it's positively sloping, which tells us we're still in a very strong bull trend. Remember, when the price action and the trend are bullish, you want to remain bullish and you want to watch the price action very closely at critical support levels. So critical support levels to watch are going to be 415 and 414, with that last line of defense for the bulls sitting right at 412. Below 412, you can see it's going to be a long drop back down to the 50 EMA, which is down around 402. So if the bulls are serious about going to these price targets above, they need to hold up above these critical support levels. Now the bears are going to try to short this market, and if they don't feel buyers stepping in, they're going to push the price lower. Remember, the stock market is built on buyers and sellers, and we need to see people continuing to buy the dip for the stock market to go higher. When we're trading at all-time highs, it's going to be very difficult for the stock market to continue to go higher without buyers stepping in. Normally, there's two types of bulls. Bulls that'll buy high and bulls that'll buy the dip, and right now, we're seeing buy the dip bulls. We did not see a lot of follow-through at that all-time high because nobody wants to take on all that risk and buy at all-time highs. So pay attention because there's a little bit of market psychology going on at these levels, and the bulls are not going to just recklessly buy at all-time highs without a good reason. Now, we did have a jam-packed earnings this week, and we did have some very strong earnings reports, which is good news, and we could continue to go higher through the rest of this earnings season. But once earnings season is over, there's not going to be too much more to convince people to buy at these levels, so we could be due for a stock market correction. So understand that we're at very critical levels to the upside right now. So upside price targets are 418, 423, and 426. And I think the highest likelihood price target is that we're going to hit 423. If we get a blow off top scenario, we could continue to go higher, but we would need to see an increase in volume for that to happen. So note, we are seeing a little bit of an increase in volume the last couple of days, but we're still on relatively low volume and we're not seeing those big money sellers stepping in just yet. So this was the last day of April and we will be starting the trading session of May come Monday, and we will be watching the price action very closely. On the triple Qs, we also dropped 0.66% today, closing right on top of the two support levels at the 13 EMA and the 20 simple moving average. The triple Qs are already at a critical support level, which is that 20 simple moving average right around 337. The last line of defense for the bulls is going to be that support level at 334, and then we could retest the 50 EMA on a break below those levels, which is down around 328. Critical upside resistance for the triple Qs is going to be 339, 343, 345, and 350. Remember, we did have a lot of strong tech earnings this week and it still didn't really help push the price higher. So there could have been a lot of profit taking and we could start seeing the triple Qs going higher starting next week. Watch the volume very closely because if we're breaking down below support on higher volume, that will be a bearish indication that we're heading much lower. So remember, critical support for the triple Qs is 337, 334, and then we're likely retesting the 50 EMA at 328 on a break below 334. On the Dow Jones, we dropped 0.48% today, also holding up above that 20 simple moving average and holding onto the bullish trend. The critical support levels for the Dow are going to be 338 and 337, and remember the 50 EMA is down here at 330 if those levels don't hold up. Upside resistance is still 341 and 347. On the Russell 2000, we dropped 1.36% today, also holding up above the 20 simple moving average and still holding on to the bullish trend. So note, all of these indices still do have bull trends and still do have bullish price action. There's no reason to become overly bearish until we see the market roll over and start reversing the bullish trend. So the critical support for the Russell 2000 will be 224 and the 50 EMA right around 221, with upside resistance at 227, 230, and 234. ARKK dropped 0.81% today, closing back below all the moving averages and still trying to build up a trend. There's no trend for the bears or the bulls currently, and we still see ARKK sort of consolidating and chopping around sideways. ARKK will have support at 118 and the gap close at 115, with upside resistance at the 50 EMA at 125 and the resistance trendline breakout at 127. On the VIX, which is our fear indicator, we did go up today, closing at 18.6. That is a close above the resistance level at 18.2, but we're still trading below the critical level at 20 and the 50 EMA, which is at 19.6. Remember, if the VIX gets into the 20s, we want to be on lookout for a stock market correction. As long as the VIX is staying between about 16 and 19, we don't have to worry about a massive sell-off. If we see the VIX climbing and continuing to go higher, that will be an indication that we could see a much more deeper correction in the stock market. So watch the VIX very closely, and we're looking to see if the VIX is going to hold up above 18.2 or start breaking back down and heading lower. On gold, we continue to go sideways, but we are holding up above that critical support at the 50 EMA at 1765. We're just a couple of days away now from the 20 simple moving average crossing back above the 50 EMA, and then gold will be in a full bull trend. Gold price targets are above at 1776 and 1829, with downside support at 1765 and the 20 simple moving average around 1761. Silver's in a very similar boat as gold, and it is holding up above the 50 EMA, and it's going to be very close to going into a full bull trend. Critical support on silver is 2580, with upside price targets at 2650 and 2760. On Bitcoin, we're currently up over 6%, and we are back above that critical resistance level at 55,600. This is good news for Bitcoin, but we need to see Bitcoin closing above this level. This could be a reversal of the bear trend, and it could be a reversal of the correction, and Bitcoin could be trying to go back up to all-time highs. There will be a critical resistance level yet again around $61,000, and if Bitcoin can continue to close over 55,000, we're very likely going to retest that resistance level. So watch Bitcoin over the weekend to see if it can hold above this critical level at 55,000. If this level does not hold up, we could very quickly retest support, which I did change this number just a little bit, and it's now right around 48,650. So watch the support level, and if that level does break down, we could be going back down to $30,000 on Bitcoin. On Amazon, we dropped just a little bit today, going down about 0.1% and closing back below that price target at $34.82. We did have a strong earnings report on Amazon, but that was not good enough to stop the sellers from taking profits. So Amazon's price targets are still $34.82, and on a close above that level, we will have a price target at $35.98. Downside support is going to be $34.42 and right around $33.70. On Tesla, we went up over 4.7% today and had a very bullish day. The price action had no trouble bouncing off support at 670, and we did get a price action close back above the 50 EMA from 702. So Tesla is very close to going back into a full bull trend. It just needs a couple more closes back above this critical support level at the 50 EMA. The next resistance level for Tesla is 718, the resistance trendline breakout at 750, and then we'll have price targets at 762 and 802. So Tesla is starting to look good, but we need to continue to close above this critical support at 670 and the 50 EMA at 702. On Apple, we dropped over 1.5% today, and Apple did unfortunately close below that 20 simple moving average. So Apple's still in a bull trend, but it doesn't have bullish price action anymore. This could mean that Apple is going to retest the 50 EMA at 129, and if that level doesn't hold up, we could close the gap at 128. However, this could still be a false breakdown, and we really need to see one more follow through on the price action to confirm that Apple is going lower. So watch upside resistance on Apple at 132, 134, and 137. On the financial sector, we dropped 0.87% today and closed above the 5 EMA with still holding on to the bull trend. Remember, the financial sector was way above the upper Bollinger Band, so it's no surprise to see it cooling off a little bit today. The industrial sector dropped 0.66% today, closing above the 5 EMA and still holding on to the strong bull trend. The healthcare sector dropped 0.3% today. It did close below the 13 EMA, and it is still holding on to the bull trend, and we will have critical support at that 20 simple moving average. The energy sector dropped 2.5% today, closed right on top of the 5 EMA, and still holding on to the full bull trend. The energy sector could just be cooling off after this monster run up and getting ready for another leg higher. So going back to the S&P 500, remember we had a very flat week of consolidation, which could be a correction through time, and the market could be gearing up for another leg higher. It's going to be very important going into next week to watch the price action at the critical support levels very closely. We still have bullish sectors across the board, and we still have a VIX that is holding up below 20. So overall, the stock market is still bullish, and a little bit of profit taking and volatility near the end of the month is completely normal. If you zoom out a little bit, which we'll do on our Sunday macro level analysis, you can still see we had a very bullish month of April for the stock market, even though we did have a little bit of a flat and volatile close for the month. So don't let this bull shakeout that we had today turn you into a bear until we see reason to go bearish. The price action and the trend are still saying bullish, and we still don't see a huge volume wave of selling just yet. So I'm still favoring upside price targets on SPY at 423 and possibly 426, but we need to watch the price action day to day and continue to be objective on the analysis. Also remember, on the Stocks Channel Discord, I'm giving you intraday updates and analysis to always help you stay on the right side of the market. I'm also bringing new trade ideas to you weekly to help you crush this market. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description of the video. Next up is our trade idea Shopify, which did drop 4% today. It closed right on top of that cluster of support that I gave you last night, right around 1179. This could be a strong support level for Shop, but we still do have a gap close below at 1169. So we could have a little bit more downside before we start running up higher towards these next price targets. Look for upside price targets at 1241, 1332, and 1390. Remember that the downside support levels are 1179 and 1168, with a possibility of coming back down to about 1134. Our next trade idea is Disney stock, and we did see Disney getting very close to breaking out today, going up 0.37% and closing back above all of the moving averages. So the price action on Disney is starting to confirm a breakout, and we're very close to going back into a full bull trend. So Disney is looking very good, and this could be a very strong and powerful bullish breakout going into next week. So look for upside price targets at 189, 192, and 194, with the likelihood that we would see a lot of resistance at these first two price targets. Downside support is now going to be right around 185.50 and right around 184.50. Remember, Disney is going to be very explosive when it finally breaks out, so make sure if you want to get in this trade that you have a very clear entry and that you're not chasing it later. It's very likely going to be very explosive and then may cool off a little bit before it goes up for another leg higher. So the price action we're looking for on Disney is possibly something like this, with a cool down and then another run up to get through the rest of these price targets. Remember, earnings is all the way out in the middle of May, so we have plenty of time for this trade to develop. So happy Friday, everybody. I hope you have a great weekend. And as always, I will see you in the next episode.